On the call this morning, Asian markets are down over 0.5% on disappointing machinery orders out of Japan and slowing lending numbers out of China. U.S. futures are flat despite a positive note on the bank by Barron's, saying Goldman Sachs, JP Morgan, and Citi are all undervalued. Oil is negative for a second straight day on news Saudi Arabia will increase supply. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele from the street, and together we bring you the morning call. Happy Monday, everybody. Scott, happy Monday. Let's see if it's a happy day for the markets, ending down 6 consecutive weeks, first time since 2002, opening flat today. Now, according to reports I read over the weekend, it looks like we could still continue this losing streak for at least a month or so. What do you think?
Well, we have a lot of overhang. We have a lot of economic news coming out. We have a lot of those questions that are still unanswered. And technically, we've been under a lot of pressure. Just because we've been down 6 weeks and we have all those headlines saying it hasn't happened in 28 years, it's still only about, it looks pretty grim, and it's still only 7.5% off those highs. And the market has come considerably from the 2009 lows and even from September. So we still need to be cautious here because this could drag out a bit longer.
And you were watching the 200-day last week. I'm assuming that's still the level you want to look at.
Yeah, well, there's a short-term basis and then there's the macro basis. Short-term, people in front of their computer, they're getting a little chopped up because they've been trying to buy and it hasn't worked yet. A lot of people now are starting to really talk about this 200-day moving average, that 1250 level we've said should be a magnet, the Japanese crisis low, and we're getting close to that. So it's going to happen a few different ways. Let me just quickly show you the chart. If you look right here, just again, I like to show you previous signs so you know how to act the next time. This was when we shot Osama bin Laden and killed him. This was one of those spots to get out. This was your breakout failure. Look at this gross engulfing bar. That told you to get to cash. And now look where we've come since. So we are lower, but we still are, about 20 handles above the 200-day. That seems like a magnet and that level. And we've talked about the 200-day for the last week, saying we're going to get there, and we keep getting closer.
Do you think that we could still see those intraday bounces or even close up one day but then still continue down? Are we going to expect that in the next couple weeks?
Well, that's what happened last week. On Thursday, market opened up. We went up like 80 points. And it had no power, it had no participation, and it was just almost like a pause, which was more frustrating because traders want this to get crazy. They want this market to finally have that 15-handle down move, open low, reverse higher, get that trade away, and then maybe start a bigger bounce. But if we still have those days where we're up a little bit, doesn't amount to anything, it's just prolonging the process, this corrective process, which does get frustrating for everyone who's trying to be involved.
This is what I think is a little strange, though, because one of the reasons the biggest headwind for the market, investors said, were, $4 gasoline. Well, now we have a stronger dollar, so all commodities are selling off. So you think that this could be a good thing, that this is what we are waiting for to get more positive, and it's not happening. So it seems like the markets don't really know what's going to give it direction.
Well, that's only one of the problems, and that's the problem, is that we have about 7 problems that we're trying to deal with right now, whether it's the European woes, whether it's the debt ceiling, whether it's the economic slowdown, whether it's high commodity prices. And right now, oil is still like 96, 97. Let's see it being positive if it gets down to that 88, 89 for psychological purposes. Right now, it's still pretty high.
All right, so real quick, what's your strategy? Would you be more apt to be short today, long, or out, or what?
Well, that's part of the problem, is that we've come so far so fast that it's hard to be short. But if you're trying to buy, we're not hitting any kind of continuation, so that means frustration, choppy action. That's why we need to get to that key inflection point so we could sink our teeth in instead of just trying to sit back on the sideline.